I bought my first condo and I saw how that value started to climb. And all of a sudden, I'm getting actually richer by the year simply by making the payments on my condo. I wasn't really doing much. And all of a sudden, I'm like 50 grand more. Next year, I'm actually have another 100 in equity more that I would have never been able to touch if I was a renter.
This is Beyond the Listing with Pam Flitton with Remax Fine Properties. And my guest today is Abe Hakawati.
Huh.
Yes, he is a mortgage loan officer and real estate broker. What's licensed in California, um, Florida, and Texas. He does a wide range of loans that has to do with commercial and residential, and he does it throughout. And he also has a license for real estate, and he's here to help you, and we're here to discuss all sorts of different things. So, Abe, tell me a little bit about yourself.
Thank you for the introduction, Pam. So it's exactly what you just said. I'm both and multiple states. I have done transaction nationwide, again, commercial and residential. So I really have a wide view of qualification, holding, investing, cashing out, and keep climbing the wealth ladder. And they a huge advocate of home ownership.
That's awesome. That's awesome. So, tell me, how did you get started in the real estate business?
I started actually as a mortgage broker in a small Chinese bank in LA. And I got my training there. I didn't really know much about the mortgage business. I got my training there, and then I was put into one of their branches to service their clientele. And from there, I went on to different branches, worked for big banks, and I would manage small branches that were in Santa Monica, Malibu, serviced high net worth clientele with high value properties, also to small value properties. And then from there, in 2000, I decided that I wanted to get more sun and more white colors. So I moved to Miami and went out on my own and had like a little shop where we serviced also first time home buyers to again to a high net worth clientele in Miami Beach, Palm Beach, and everything in between. So serviced mainly South Florida.
Okay. All right. So, you're licensed in multiple states for real estate and for mortgage loans. Is that correct?
Correct.
I love that. So, is there somebody that you like working with more than others? I mean, I know we talked about earlier, you're really passionate about kind of first time home buyers getting people into a home. We kind of talked about that you're passionate about, getting people into home buying, building their wealth. So, you want to talk a little bit about that?
You see, actually, I realized that feeling of home ownership when I bought my first condo in LA and how much of a nightmare it was to my real estate agent at the time when we were selling. Is I was extremely doubtful. Is this the right time? Should I buy now? It's too expensive. Interest rate is high. The payment were definitely higher than my rent. But then once I bought my first condo and I saw how that value started to climb, and all of a sudden I'm getting actually richer by the year simply by making the payments on my condo. I wasn't really doing much, and all of a sudden I'm like 50 grand more. Next year, I'm actually have another 100 in equity more that I would have never been able to touch if I was a renter. And I kept that feeling actually, and from that point on, bought my first again my house there. I noticed at the time that I arrived in Miami, properties were definitely cheaper. But then I noticed how actually richer I became again by just making my mortgage payments. So this is something that I want everybody to feel. I know it's difficult to buy a first home. I am here. I've been there. I bought the t-shirt and I want to actually have everybody that does. If you're 30 and above, and you don't own your property, you're too late. Buy now. Do not care. Interest rates, I don't know, prices. If you can get your foot in the door and buy a property, this is the for sure thing for you to get richer and to continue to climb and surpass the inflation rate that we all face.
Well, for sure. There's a lot of loans out there. I think sometimes there's a myth that you have to have a huge amount of down payment to get into a loan. A lot of times there's as low as, 3.5% to get into a
Yeah.
home. And a lot of times you can get, if you're working a resale or a new home, you can get the seller to pay for those. So a lot of times you can get in for, as little as zero down, or, or you're paying just, very little to get into a home. And I don't think a lot of times that a buyer can understand that. So it can be negotiated in, or you can pay a little bit more for the home and negotiate them paying the closing costs. So can you speak to a little bit about that?
Yes, actually, just commit to it. Buy a home, stop paying rent. And there are tools out there that you could use depending on where you are financially. Work with a mortgage broker. Make sure to understand what you're qualified for, depending on your FICO score, depending on your reserve, your employment history, and so on. But get that done out of the way as soon as possible, because once you start shopping for a home, you will know what you can and cannot afford. And yes, like you said, you can practically walk into a home with zero down. For example, I just got an email yesterday from Petersburg County in Florida. They have what they call it's a payment assistance program. It goes up to $80,000 where you can use it for down payment, closing costs, and next year home repairs. Just come and buy in Petersburg County and become a homeowner. If you have lost your home in the hurricane, I think the last hurricane that we had, I think it was last summer, you will automatically qualify. That's 80 grand, free money. Come on in, use it. It's just like the 401k plan, for example, that we were, wrote into, where the employer would actually do it. That's free money. And you let, so there are programs out there where it's actually a grant. That's the word that I'm looking for. If you stay in your home for 5 years, that money is forgiven. So I would be a huge advocate. Use it, buy it, whatever, decide on. Sooner or later, the sooner you can get yourself into home ownership, the quicker you're going to be richer than where you are. Your net worth
And
will definitely climb.
there's grants all over, and there's programs all over. Everywhere you can find those grants. Every counties, every state, everywhere you can find those grants that can help you out to get into a home, for sure.
Buy a home.
Yeah.
Go buy a home. Just decide and stop paying rent. That's the issue. Buy a home, find yourself a good real estate agent that you work with correctly, get your financial advisor, buy a home and stop wasting money on rent.
So those are oftentimes options that buyers overlook, and that's a great way to qualify sooner than what's expected. I've had clients that have gotten qualified, at 22, 23 years old. My own son bought a house. I believe they were 24 and 25.
Wow. How wonderful.
Yeah, absolutely. So, they just got into a home and
Good for 'em.
have been, and the amount of equity that they have in there.
Yeah.
I-
At such a young age. You don't need to be until your 30s or 40s before you know that you have a couple of $100,000 in equity available to you. And you start to learn the lingo. You start to understand how inflation works and how equities work. The younger you are, the higher. Obviously, you look at these kids right now, they make much better money than our age. I mean, $100,000 to a 23-year-old now is nothing. It's a car.
Yeah.
Remember, the days that when I was 18, the first car that I bought brand new, I think it was like $7,000 from the dealer. So no, that's not even a down payment for a car for a 23-year-old, which I feel sorry for them. But again, if you would have bought a home and you have some equity in it, $100,000, it's nothing. It's 5% of that.
But I think we made way less and they make way more now. So tell me, why large bank decline buyers. So tell me some of the rigid guidelines or the lack of flexibilities for real world incomes. Can you talk a little bit about that?
So we are in the best country in the world to buy a property. The programs that are available to us, they aren't available anywhere else in the world. Everywhere else you go around the world, you'd have to come up with at least 15 to probably sometimes more down payment. That's hard money plus closing costs to buy a property. In the US, there are programs that, like we said earlier, you can go into a property with zero down. Now, there are three major programs available to the public. The first one, it's the big bank. The big banks have certain guidelines, they're rigid, they're backed by the federal government, which is Fannie, Freddie, or which also has FHA or VA programs. Those have certain boxes that if you don't fit in them, unfortunately, you're going to need to go to the next category. The next category is called non-qualified mortgage. The difference between the two, each one, the banks look a certain way, looks at your income in a certain manner, which they will always look at your tax returns, your W-2s, your pay stubs. If you don't qualify there, if you don't have enough income there, they're going to decline. Unfortunately, they're not declining. They're just saying that you don't fit in our program. So what do? You go to the next type of lender, which usually are not on your street front. You're going to have to go through them or find them through a mortgage broker. They only go through mortgage brokers. They don't go through a bank. Just like an insurance agent. There are policies that you don't find through your big insurance company. So, not qualified mortgage, they're much more flexible with their down payment requirements, income calculation requirements, and and terms of the mortgages that they offer. Now, believe it or not, those are they take a good chunk of the market, which is, I tend to say maybe it's at least 40% of the market. The other majority, it's the big banks that, again, they go, it's just if you are a regular employee, business owner that you think can qualify, you file your tax returns, you're going to fit in those categories. The other ones will probably charge a little bit of a premium. We've done what Fannie Freddie would probably charge. You probably end up paying maybe 1% or 1.5%. But again, it's going to give you a program that otherwise would have never been available to you to be a homeowner. The last one, which is actually more of your credit is extremely damaged, and that's because of bankruptcies, health issues, whatever bad news that you have gone through, which they would call them, for lack of a better term, hard money loans. And those would usually require more of a bigger down payment because they're not depending on your income.
What kind of credit score is that?
On which one?
So, like all three. So, if you were going to get let's say the hard money, what kind of credit score is that?
Hard money, they don't look at credit score. They look at the asset. They're asset-based lenders. They look at if you default, they have a way for them to get their money back. It's really, the entire mortgage industry is built on,
on how they want to get their money back.
Yeah. How do we stay positively producing? And we're not going to go broke if our clients gets into a bankruptcy. So on hard money, they purely look at your equity. They're going to look at your income just to make sure that you are able to make the payments. So no score there. The one before that, which is a non-QM score, depending on the type of property that you're using, they will go down to 580. And anything above that, the higher your score, the better the term, the better the interest rates. Before that, there are programs, which is FHA right now, which is being pushed by the federal government. They will go down to, what I'm told a couple of days ago, down to 540. Which is unprecedented. I mean, the current administration, they want to promote home ownership, and they're actually making it easier for somebody to qualify. Yeah. So the score is not becoming an issue. Your really biggest issue is ability to repay. If your income is documented and you could show ability to repay the mortgage payment, you're home free. You're in with no issue whatsoever.
Well, that's amazing. I mean, it seems like almost anybody right now could get in to buy a house. So
Absolutely.
seems like right now is a great time. Prices are relatively low, or lower than they have been, especially in the Austin area. They're relatively lower than they have been in quite a while, a few years. And it seems like they're really wanting to get people into to purchase homes.
It's a buyer's market.
Yeah, it's a buyer's market right now. So that seems wonderful. So tell me, what are lenders actually looking at, and how can buyers move forward?
Again, they're looking at the collateral, the property that you're buying. They're concerned about your income, and they're concerned about your credit. You know, and then it's actually three balls in the air. You know, if those three balls can stay in the air, you got yourself a mortgage. And you show ability to repay. The terms are acceptable to you. The property actually fits in their box. It's their qualification. It's not something that you're buying. But all of those actually fit. You're in.
Let's
You're a homeowner. You know, now you are in the driver's seat of the economy. You are, if things go more expensive, guess what? Your home value is going up too. If eggs actually cost more, guess what? Your home value is actually higher too. So, on the other hand, if you're renting and eggs go up, guess what's going to happen? Rent is going to go up.
Yeah.
Gas is going to go up.
sure.
And, you know, you're on the paying end. You're not actually on the receiving end, like if you were a homeowner.
Yeah, the only thing that goes up on your home is the
That's money.
that's real.
That is money.
Yeah,
That is definitely money that can be in your pocket.
yeah. That tax bill every year that comes in from the appraisal district. That's the only thing that will raise your
Now we need to talk about that.
yeah. So we talked a little bit about turning renters into owners. So how stepping stones programs work, building a path to ownership. So we talked a little bit about that. Can we go in a little bit deeper into that?
Sure. Tell me what creates your curiosity that can help me get the beginning of the thread that I can follow.
Let's say I've got a single mom. Let's just throw some things out there. I've got a single mom. Let me just throw it out there.
Actually, you know, can I tell you about a program that just came back?
Yeah,
just
tell
came
me.
in. Okay, so say that you got into a bankruptcy last year, 6 months ago.
Okay.
You filed bankruptcy, whatever. You're a business owner and things didn't work out somehow, and you had to file for bankruptcy 6 months ago, but you still have your cash flow. You want to be a homeowner. So there is a program that now it's called Earned Equity Program, which would mean there's actually in Florida, there's an Indian tribe that can get an FHA mortgage, buy the home with you. Now you'll become in a partnership with the Indian tribe, and technically you're renting the home with an equity that's recorded under your name, and continue to make the mortgage payment on the FHA loan that they get for you. You stay in the property for 6 months to a year, and then you can come back to the tribe and tell them, you know what, I'm going to take my ownership. You pay them the money that you owe them, which is some program fees, and you own your home. They don't care about your credit. They don't care about your income. As long as they can show in your bank statement that you have enough cash flow to make your mortgage payment, you're going to be qualified. They can care less about your credit too. So this is a new program that just came in not too long ago, and we're having a success with it. And again, this comes back to the fact that there are no excuses for anybody to get into a home. Now, on the other spectrum, for somebody that, you know, say works in a medical field or tech field, or, you know, and he's on a salary, the new programs can allow us. In the past, we would have had to stay at almost 30 to 40% of your income would have to show ability to make payment. Now we can go up to 50%. So if you make 1,000, your mortgage payment is 500. Qualify. You know, you have an income that covers 50% of your covers 100% of your mortgage, which that was not available in the past. Again, yes, things are getting easier to qualify for. Again, going back to the fact that this administration is actually pushing for home ownership. When you're a home owner, the entire community around you changes. If you noticed that when you live in a rental community, it's completely different than you're living in a transient community. Nothing to speak bad about it. But when you have your own home, you take care of the streets around you. Your kids go to the school where your neighbors actually are friends with your kids. You're living in a different life. Got a picture on your wall. You don't need to ask for permission. You want to change the color of your wall. You don't have to ask for permission. It just brings a different color to your life. And I think everybody should taste that.
Well, sure, I agree with you 100%. It's just uh it's it's just different when you own your home versus renting a space because it's yours and you treat it like it's yours, not like it's somebody else's for sure. I agree with you 100%. Um so again, why do banks decline buyers who may qualify elsewhere? So we talked about that income verification and lending flexibility. It just seems so easy to be able to get a loan nowadays. So why do you think that people are waiting to get a home? Is it just lack of knowledge that they don't understand? Now's a great time to buy, get a loan, and how easy it is. Do you think it's just the knowledge?
I mean, I remember when my kids, all the kind of ice cream they wanted, it's either chocolate or vanilla. And we were like, with their mom on the trend, try the strawberry, try that. And they're like, no, until they did. And now they want to try all kind of ice creams. And I think first home buyers this is the biggest fear that they have to overcome. They know it's good for them. But they're just worried about getting declined, maybe. They don't have the trust in themselves that they will qualify. How can they keep such a debt? It's obviously going to be probably the biggest ticket on their credit report than anything else that they have owned. And making that jump and trusting in yourself that, yes, I can maintain that property is the biggest fear that you have to overcome. And you know what? I mean, look around you. The people that own properties, they've all been there. They've all gone through what you're trying to get through. And scrolling communities, you're gonna flip. If you look, there are more homeowners in the country than renters. So the sooner you make the jump, the quicker you are on living your full potential. And not holding back on things that otherwise could have been achieved on your end. It's just, I think, the fear. I mean, that's what I'd gone through when I first bought my first home. I was scared, really, of how am I going to be able to continue to make such a payment. It's larger. I have to worry about the repairs. All the negativity that you see in the social media about, it's easier to rent. You just get up and go. No, it's not. When you're a homeowner, you're much more in control in your life. You can always walk away from a home and rent it and earn that money and continue to earn the equity that will continue to accumulate. So be a homeowner. Do not be scared. The quicker you jump again, I keep going back to that fact, the quicker you are going to be wealthier, no matter what. Yeah, invest everywhere you want, but own the roof over your head that you're living under.
Well, I agree with you. There's only so much land. You should own some for sure.
Yeah, absolutely.
I think it's a great way to become wealthy, and considering that most people, this is going to be their biggest purchase. And if you start off small and then, jump from one to another, it's going to grow your equity for sure for each house. I know that this is the way that we've grown our wealth, from one house to another to another. Each time that we've sold a house, we've, not doubled the amount, but close to it.
Walked away with something.
Yeah, absolutely. So, and we've been able to put, that much more down on each of the other houses.
Absolutely.
Equity on each of it. I had a client that I worked with probably for 3-4 years, a very young couple, and I had encouraged them to purchase a house. And we kept going out and looking. I'm like, this is a great deal. You should do it. You should do it. But it took them almost 4 years to purchase.
Yeah.
When they finally did, we talked about the equity that they would have had. And I said, see, you should have purchased. I said, you would have had this amount of money. And they said, well, we know, we just weren't ready. So sometimes you're not ready, but, they said we should have, but we didn't.
We all go through that. Same thing. When I bought I looked at the rest of the units I looked at all these properties before that my agent showed me. I'm like, oh my God, if I bought those now, I would have been that much richer. But when do you realize that? after the fact, after you become a homeowner. Then you start to look back at all the properties that you passed in the past, and you go, "Oh my God, if I would have, I would have." Well, sadly, you'll only realize it after you buy your first home. So make the jump. Believe in your agent. Make the jump. You will be rich.
Sometimes you get the shoulda, woulda, couldas, right? Right. Yeah. So,
Unfortunately.
well, that's great. So, Abe, tell me, as we're coming to a close here, tell me where we can find you.
Well, my website is myloandesk.com. myloandesk.com.
Okay.
You could reach me there. I have my phone number. You could email me, text me, however you'd be. I'll be happy to go with you over the phone on what the possibilities are for you.
So, what's your phone number?
I'm 00. Again, that is 305. That's Miami area code. 305 891 6500, and my website is myloandesk.com.
And it looks like you have an Instagram as well.
I do. I'm trying to actually learn the social media and kind of get that wealthy. I'm having a hard time with that.
Well, that's okay.
I actually have a TikTok, an Insta, and a Facebook, and I'm trying to get them to work correctly.
I have somebody that does my social media for me, and he is a rock star. So you just let me know, and I'll send him to you.
Please.
He does a fabulous job. I get lots of comments on him, so
Great.
I'll send it to you.
That's how you found me, I guess. Obviously, somehow we connected.
That could be true. So if you're looking and you want to get more information from Abe, you can contact him at 305-891-6500 or www.myloandesk.com. Give him a call. And Abe, thank you so much. It was a great conversation today. And just remember that purchase a home. It's easier than you think, and this administration is making it so easy for you to get into a home. And there's a lot of programs out there, and just do it and don't have the woulda, coulda, shouldas, right?
Absolutely.
That's awesome. So anything in parting that you want to say?
Thank you so much. You've made it so easy to express my thoughts, and good luck to every new homeowner.
Yeah, thank you so much, and we'll talk to you soon.